Hi, folks, and welcome to another exciting adventure of money and politics. You may not be so excited today because the market is down heavily, but don't worry about that. And I'll be going into why you shouldn't be worrying about that. Let me bring up, if I might, if you want to follow me on Twitter. Earlier today, I did a couple of tweets because the market was down so sharply, and TSMP. Obviously, we talk about TSMP a lot here. Humble was down a lot, and I was able to tweet out my thoughts to those that subscribe to my Twitter handle before I could knock out a video. Even when I kind of wing this, it takes a bit to get some of the ducks in order to knock this out. I'm coming to you today at about 12:15 in part because I have three sons. Two of them live in the Chicago area, so I don't get to see them as much as I would like, but one of them is coming to visit this afternoon. He'll be arriving right about the time I would normally be doing a video when I do a video, which is right after the market closes. So that said, I'm coming to you early. So where are we right now? Right now, we have TSMP is down, as you can see. It says 14.6%, 15% now, but the point is we're at 96 cents. It wasn't all that long ago that we were, let me go back to a month here. We're back to where we were cheering the price on the 4th of February. This is February 23. So my point is I am not worried about this, and I'm going to go over and be talking to you about why. First of all, I'm going to talk to you about concepts today, and I'll mention a couple of other things, and I'll try to make this as quick as I can because I don't know how long. Most people don't want to even watch the whole thing, even when it's shorter. So as I said before, and these are some powerful concepts, folks, we work for cash flow. If you're working right now, or if you just came home from work, you're going to get a paycheck, or your business is doing transactions, and that's how you bring money in the door. Maybe your wife is working, you're working. You guys have your household income. We work for cash flow, but remember, if that's a salary, then you're probably getting a cash flow that's going to be linear. It's going to be fixed, right? But we invest for wealth. We invest for wealth because our wealth investment is not fixed. If you and your wife are both making $50,000, you got $100,000, there's no reason based upon earning a salary that you're going to be making more than $100,000. You're not going to expect that. But when we invest, boom, and there's what happened to our investment in Humble over the last 6 months. We, even today with the downturn here, look how much higher we were than we were at the beginning of the year when Humble was down. It's even hard to read down there, like what, 49 cents or something. Anyway, the point is you get the idea. So we work for cash flow, we invest for wealth. And so when you have days like today, when you have the day where you go, oh man, we're down 16 cents, we're at 96 cents, I thought we were going to be going up. Here's what I'm going to be saying. When you are buying any stock, okay, we're not buying today. We are buying the future. We're buying the future. And so the way to make money in the market, and this is so obvious, but I'm going to point it out anyway. You buy something today because of the future value of it. It's the same reason you might go to college. You invest today because you think you're going to be getting value that is going to augment your ability to make money in the future. We're buying the future when we invest in the market. We're not buying the present. And I will tell you, and it's very applicable today, that the markets are not rational. Those that say, it's one of the books that I have poo-pooed called A Random Walk Down Wall Street says, the markets are rational. They're not rational. And you see it today. Everything is down. The markets are a daily tug of war between greed and fear. And you know it now because you've been investing, right? You know it now because you've got money on the table, and maybe you were buying when it was $1.70 and we're down, and you thought, oh, it's coming back up towards my $1.70. No, now it's slipping again. And you feel that in your gut. You feel the excitement when it goes up. You feel the pain of it when it goes down. So, folks, I'm just coming to you because I could feel the fear this morning. That's why I posted some of these things, these comments on Twitter. I think I'll bring that up if you want to follow me. I like Twitter because I can make an immediate comment, and that's what I did today. So here's the thing I would say. When we go looking forward, here's what we have coming up this year, and I just got a couple of notes. I don't have any other cute graphics right now, but just my theme for 2021 is that we're going to be recovering from the COVID, not just in the United States, but worldwide. As I was taping this, I just got a news flash. The states are going to get 14.5 million doses of COVID-19 vaccine this week, marking a nearly 70% increase in distribution of doses over the previous month. So that's a fact. That's a piece. That's not my opinion that 2021 is going to be a year of recovery. That's a piece of information. I'm a reporter professionally, so I sometimes pull a lot of information out of my past because I've been there, done it. But I'm also basing information on the present. So what do we know? We know what I just said. We know we have a vaccine. We're increasing the doses. More people are getting their shots. And so we have every reason to believe that not just in the United States, but around the world, we're going to have a global economic recovery as we reopen the economy. Okay, that's number one. Number two, the stimulus is coming out. Now, a guy on Fox Business today, on the 23rd, pointed out that if we gave everyone in the country, everyone in the United States, $1,400, that would only add up to something like $360 billion. So what are we doing with $1.4 trillion in a stimulus? I don't know. As politics happens, and that's why I say money in politics, they're throwing a lot of money out there. And at some point, I'm going to come back to you and talk about the importance of productivity and why it's important where money goes, whether it's your money or the government's money. But I don't want to give an hour-long seminar if I'm trying to make these in digestible bites. Hey, here's everything I learned over the last 40 years in one video. No. So we're going to be recovering. We're going to have the doses. We're going to have the stimulus package coming in. About 60%, 60% of the U.S. economy is based on consumer spending. With all of this money, we also have low interest rates. We had just today Jerome Powell, the chairman of the Federal Reserve, testifying in Congress. They're going to be keeping interest rates low, and so those are all positives. Everything I just said is a positive for an economic recovery this year. Now, it is somewhat true, as so goes the markets, so go the stocks, but it isn't always true. And when we invest in TSNP and forwardly, those are going to be, certainly at this point in time and throughout 2021, I think those are going to be disconnected more or less from the overall economy. And why do I say that? Because they're so new, because they're growing. So they're going to have a rapid run up in growth because they're starting from zero. So that's something to consider. Now, as we go along, there are some concerns I have. I have concerns about, speaking of all this stimulus money, we have a growing national debt that is getting to be of dangerous proportions. In fact, many would say it's already of dangerous proportions. So that's a concern longer term. I have concerns because we're throwing so much money into the economy from the Federal Reserve that we're going to have inflation come back. And that means that if you're holding cash, the buying power of your cash is going to go down. Now, what that also means are assets, hard assets, go up. So you can look to buy commodities are frequently a hedge against inflation. Things like copper, silver, gold, those are commodities. The value of your home will probably go up, but is it going up in real terms or is it just going up in inflationary dollars? Open question. It all depends how much inflation we have and where your home is located. The other thing is inflation is a good thing in some ways if you are holding debt, because when you pay debt down over a period of time, like if you have a home mortgage, you're paying back those fixed fees of, let's say it's $1,000 a month, but as inflation goes up, the $1,000 is diminished as far as its real value. So it becomes, in effect, cheaper for you to pay off your home. I'm probably throwing in too many things at one time here. But let me throw out a couple of things. If you're looking at some other stocks, and I'll be taking a look at stocks, while we talk so much about TSNP and Forwardly, there's not really a lot new to add to that right now. My best advice, and this is kind of what I'm saying, don't panic on down days. As I've said before, the markets are a daily tug of war between greed and fear. But on one hand, we don't care. Why? Because we're buying the future. We're not buying the present. We don't care that it's down right now. What we care about is that it will be going up in value in the future. And that's what we are buying. And so as we go forward, we're going to be seeing over time, we're going to be seeing I think the price of the shares going up as we have seen in the past. Just as hopefully not like this, hopefully not as sharply. We've talked about this. You don't want something going parabolic. But like we saw here beginning around December 16th, this was a nice rise along the bottom, and adjust that. So right now we're at 95 cents on February the 22nd. I'm expecting by the time we get to June, July, that will be, I think, over $2. I don't have a crystal ball. I'm making an educated guess. But that's my expectation. When we get to the end of the year, I think we could be, depending obviously upon a whole variety of factors, I think we could be somewhere between $4 to $5. I think that would be a healthy area of growth. I mean, if we shot up, some people are telling me, oh, we're going to be at $20 by the end of the year. I don't think so. And if we are at $20 by the end of the year, I don't think that's healthy growth. That would be that parabolic growth that we got here and then have it fall down. So if you are holding primarily, and I know some of you are just investing in penny stocks, which I'm not really, I wouldn't encourage you to do that. I would encourage you to buy some other things, and I'm probably at fault for not having discussed enough other things to tell you where to put your money. But I'll fix that. Right now, as far as the major holdings of so many of you, which is TSMP and Forwardly, just hold on. You're on, you got on the bus. If you want to do anything when these go down, buy some dips. Don't throw all of your available cash in. You always want to have cash on the sidelines. I never know when we're going to have some crash coming. And when we say crash, I don't mean 1930s crash. But we might have could we have a 2008 crash? Anything's possible, but I don't anticipate that. But what you typically do have is a market sell-off. and I'll share this with you. I've probably already lost most of you. But when we started 2016, back in the year 2016, we had a lousy period of time in the first 6 weeks. The market crashed right as we got into the new year, and it stayed down throughout January. And it wasn't until about the third week of February that we started to come out. Now, did that matter? No. 2016 ended up being a good year in the market. And then when we got Trump was elected in November, the market shot up. So it ended up in that last month or last 2 months maybe, being way up. The point is, when you're in the midst of these downturns, think of these as a storm, lightning, thunder, the wind is blowing, but you don't panic when that happens, because you know storms don't last, and that's my bottom line here. Storms don't last. Market downturns don't last. If you're in the good stocks, and if you're in Humble and Forwardly, I think you're in good stocks. I put more of my money into Humble than I do in Forwardly. But hang on, folks. Thanks for joining as always. If you would, please give me a thumbs up. Share this with other people if you will. And maybe come back and listen to this again if we have some future sell updates. It doesn't pay for you to panic, okay? Doesn't pay for you to panic. So with that, have a great day. It's a warm time, 50 degrees here in the middle of Illinois. And I hope you and your family have a great day and invest wisely. We'll talk to you soon.